If you own a partnership or an S corporation, this video is for you. We dive into one of the most overlooked but costly mistakes many small business owners make every spring: miss the March 15 filing deadline. In this short minute section, we'll walk you through what a business extension really means and how to file it the right way, and what's the new e-file update, and then the best practice that you need to know for your 2025 tax filing. So by the end, you will understand exactly how to protect your business from late filing penalties, how to stay compliant, how to make sure your partner or your shareholder get their K1s on time. So we want to start with the big picture, right? So every year, business owners rush in mid-March to finish their books, sign the return, and send K1, and every year thousands get hit with penalty because they missed the March 15 cutoff by a single day. So before that happens, let's break down what the March 15 rule really is, who it's applied to, and why filing an extension on time can save you thousands of dollars. So understand your March 15 filing rules. It's our part one. If your business is taxed as a partnership, so that's Form 1065. Or if your business is an S Corp, so that's Form 1120S. Your federal filing deadline is March 15, 2026 for tax year 2025. So this date ensure that each owner get their scheduled K1 in time to prepare what their personal return. So missing it means late K1, late personal return, and potentially unnecessary penalties. So now, if you can't file by March 15th, what can you do, right? You can still stay compliant. You need to submitting Form 7004, give you automatically 6-month extension. So that move your new filing deadline to September 15th instead. But here's the key reminder. So that extension gives you more time to file, not more time to pay. So any tax your entity owes still must be paid by March 15th. So think of the extension as breathing room for paperwork, not delay in payment. But remember, for some of these, for the state tax side, you can pay through PTE, right? But on the federal side, remember, these are flow-through entities, so the payment gonna need to be made on your personal return. So you need to plan for all of that, right? So you're wondering what kind of tax would an S corp or partnership owe, right? So remember there's no income tax at the entity level, but S corp owner can still owe a built-in gain tax or excess net passive income tax. So partnership could owe withholding or other assessment. So you want always estimate all these numbers before you do your extension. So why does it matter right now, right? Because waiting until March to gather your financial or confirming your ownership data can easily cause even more delay. So you want to get a proactive extension to protect you from penalties, give your tax pro CPA more time to reconcile bases, schedules, and prevent error that could slow down your personal return. So let's move into what's new for 2025 and how the IRS has modernized e-filing to make this process smoother for you and everybody else. So this is going to be our part two. So over the past few years, the IRS has continued expanding electronic filing requirement and digital signature acceptance. So while the core deadline hasn't changed, how you file and how the IRS matches your payment has evolved. So say if you file 10 or more information return, meaning like W-2, 1099s, or similar, you are now required to e-file those instead of mailing paper form. So this new 10 return threshold applies to all combined information return, and the IRS encourage electronic filing for business income tax return as well. So your form, extension form, the 7004, can now be easily e-filed through your Tax Pro CPA software or through IRS Modernized e-file or MEF, like MEF system. So when filed electronically, you will typically receive an acknowledgement within 1 to 2 days. So no more waiting weeks to know if your extension was received. And there's more modernization, right? So the IRS now consistently accept electronic signature or Form 8879S and 8879PE, which authorize your tax pro to e-file on your behalf. So it's help was originally help temporary during the pandemic, but now it's become permanent, which is even better, right? Because these days you want to save the trees and save paper, right? So we know the deadlines, we know how e-filing works, right? And then now we know digital signature are here to stay. So let's talk about what actually happens behind the scene, how to file the extension properly, and how to avoid rejection that can cost you even more time or even more panic. Right? So let's move to our step 3, how to file the extension the right way. You want to verify first, right, all your business information, make sure your EIN, legal name, address match exactly what the IS has on record. Because something wrong, it can trigger a rejection. And then step 2, you want to estimate your 25 tax liability, even if you expect 0 tax. You want to double check for building gain, passive income taxes, or state level filing fees. Step 3, you want to file Form 7004 electronically by March 15, 26. You want to make sure you clearly indicate if it's for partnership 1065 or S Corp 1120S and select the automatic 6-month extension. Step 4, if you owe tax, make sure your payment by the original due date. You can pay using the IS Direct Pay or EFTPS, both of which immediately generate payment confirmation linked to your AIN. And then step 5, you want to keep your documentation. You want to save the IS acknowledgement, your payment confirmation, your CA transaction report. So these prove that your extension was filed and accepted on time. So when you follow these steps, your business return is protected, your K1 stay on schedule, and you avoid the frustration of late filing penalty. Let's move on to why accuracy matters. So we want to talk about our part 4. Why, right? Because you want to avoid rejection from the IS when you file. Just say like you have EIN that mismatch or incorrectly enter, or like mismatching addresses or missing payment can cause the IS to reject your extension. So sometimes without clear notice until a week later. So now you in a pickle, right? So you're owning penalties, you're being late, and um, that's not a good situation that you want to be in, where you can easily prevent it from happening in the first place by checking all your records, right? And then also next, you want to go over with your tax pro or CPA what they actually need from you before March 15, because what you think you provide maybe not what they need. Um, but sometimes, the more thorough they are, the more documentation they will need. And then, so that lead us right straight to part 4, what your CPA needs from you before March 15, what you need to do to provide to your CPA. You want to have a clean extension, and you want to be able to later prepare an accurate return. You want to provide these to your tax pro. So you want to do a 2025 trial balance or a preliminary profit and loss and balance sheet. You want to update shareholder and partner list to show an ownership percentage. You want basis schedule for each owner. You want copy for all 1099s, W-2 files, any loan and fixed asset records through year end. And then you want to have the signed engagement letter and then e-file authorization form, which is 8879S or 8879PE that allow your tax pro to e-file the extension on your behalf. You want to having these ready early to help your tax pro review depreciation schedule, help them have time to reconcile your shareholder loan and ensure all the K1 are consistent. Now let's talk about what happened if you miss the March 15 deadline, right? Because this is where many business owners get caught off guard. So let's move to part 5, how you avoid penalty. The penalty for filing a late partnership or S corporation return is $255 per month per partner, and this number kind of increase depending on the year. So definitely check your year to make sure that it's up to date. So the max that they can charge you up to 12 months. So that means a 5 partner in LLC that just 30 days late could owe more than $1,200 in penalties, right? Even if the entity owes no taxes. And late filing of K1 can ripple down to your partner's personal return, like force them to extend and potentially incur their own penalty or interest. So the lesson here is never assume no tax due mean no penalty, file on time or extend on time, and keep proof of both. So far we have covered the rules, the e-filing process, and the penalty. So we want to recap everything into a short checklist for you that you can use now. So this is the bonus for you. This is part 6, e-filing ready checklist. First, you want to keep your bookkeeping current through December 31st, 25, which meaning you have all the transaction in, reconciling your book, matching everything with your bank statement, credit card, all that fun stuff. And then you also want to verify your EIN, your legal name, your address with IRS records. You want to gather all the 1099s, W-2, and basic data. And then, like if you have W-2, like your payroll report, all of that. And then prepare your trial balance and preliminary financials. You want to file Form 704 electronically by March 15, 2026. If the tax is owed, pay it through EFTPS or direct pay by March 15. You want to save your confirmation acknowledgement in your file. So these simple steps eliminate 90% of the extension problem that the tax pros see every year. So now to bring this to life, let's talk through a short planning example in part 7. So say a 3-partner marketing firm realized in March 10 that their books are final. So they estimate $500 in built-in gain tax and ask the CPA to file Form 7004 electronically. So the CPA filed by March 15 and submit the final payment to EFTPS. So within 24 hours, they receive acceptance confirmation from the IRS. So in July, when their books are closed, they file a completed Form 1065 and issue K1 to each partner. Because they file the extension correctly and pay on time, they avoid all the penalties. And their partner file their personal return without late. That's how extensions are supposed to work. Organized, compliant, and stress-free. Let's move on to a quick recap in part 8. So what is your takeaway for this video, right? So extensions are not sign of poor planning. They are a smart compliant tool that give you time to do things right. The key is communication between you and your tax pro and early preparation. So if you stay proactive, you want to confirm your detail and e-file on time, your 2025 return will be accurate, your partner will thank you, and your business will stay penalty free. To recap, we have covered first the March 15 deadline and who is applied to. 2, we talk about how e-filing and digital signature streamline the process. 3, we talk about the 5 steps to file a proper extension. Step 4, what document your CPA need. Part 5, the penalties for missing the deadline. And then part 6, the E5 readiness checklist. And then we talk about an example to show you how in action what you can do. So whether you are a seasoned business owner or filing your first corporation return, the goal is the same. You want to protect your business from unnecessary penalty and keep your filing clean, accurate, and on time. So don't wait until March 15. You want to talk to your tax pro CPA now. You want to review your numbers and file the extension early. So your future self and your partner will thank you.